Bitcoin will not go to the moon. It will not go to $500,000 US. And it will also not go to zero. And we simply just look at past performance of Bitcoin and we look at the rough trading ranges. We look at those different models. We can get a relatively accurate representation of potential risk to reward. Now, in this video, I want to talk about those different models. I want to talk about the cumulative value days destroyed and about the balanced price and the top cap model. There's also the delta top and the terminal price. So I want to talk about all of those. I want to talk about how valid are those models, and if you had to pick just one or two lines here, what are likely the ones that are going to work best in the future. So let's start off with the bottom indicators. So the cumulative value coin date destroyed, that's this green line over here. Now in general it looks nice, as in it used to work as a relatively reliable bottom indicator in the past. The issue I have with this is that again it's a retrofitted model. So coin days destroyed is simply just on-chain metric that looks at how long has Bitcoin been held in a wallet, when had it last time been spent. If it has been in a wallet for a long time, then it's being transferred during the bull market because the long-term holders are selling off. That's then when the line goes up. The issue here is that the metric is multiplied by 6 million, which is very arbitrary. It's even written here on this website. It's just a number that made this line fit the best to the price. And I don't really like models that simply just randomly fit the price action when there isn't really a fundamental reason behind this. Just because something worked in the past doesn't necessarily mean that the pattern will hold up in the future. There is a modified version of this though, and this is my preferred approach for a bottom indicator, and that's the balance price. It's also looking at the coin days destroyed, but instead of multiplying by 6 million, it's multiplying by 21, and it's also putting the realized price in relation here. And because of that, it's a bit more dynamic. So when we compare those two bottom indicators, the CVDD is relatively flat. It doesn't really go down much. The balance price might decline a little bit. It adjusts faster. The bottom here is a bit more bearish though. So it's 14.3K for the balance price, 17.5K for the CVDD. I think it does make sense to go more with the cautious approach. So especially if you're considering to maybe use some leverage, maybe take out a loan to buy Bitcoin for the next 5 or 6 years, then don't panic in case we do see this 50% drop, right, from 28 to 14K. It's very much within kind of volatility we have seen in the past. And 50%, it doesn't even have to happen over many months, right? The Corona crash was pretty much 50% in just a few days. So 50% from the current price is the risk, but what's the upside potential? In the end, you want to have more upside potential than risk. Otherwise, why hold the asset? Let's start off with the top cap model. This is simply just an average of the market cap of Bitcoin, again just multiplied by a number. So we're averaging out the market cap. Since there is still issuance of Bitcoin, we can't just take a fixed number, but we're taking whatever is in circulation at the time, multiplying it by the price and then averaging it out. And then we just multiply it by 35 in order to shift this upwards. And historically, this predicted the tops somewhat okay. It did a very poor job in 2021. And this is also why a lot of people actually failed to sell around these levels. Not necessarily because of this top cap model, but because there were several models that didn't yet ring the alarm bells at the time. A lot of people still expected Bitcoin to go to 100K, which obviously did not happen. So when it already failed in 2021, I don't think it makes sense to put too much emphasis on this model today. Delta top is slightly better. It also failed somewhat, but at least we reached relatively close in January of 2021 when the altcoin rotation happened. We even didn't reach it during the 2017 bull run. Now delta top is a bit more complex. It looks at the realized cap minus the average cap. Realized again being the price at which Bitcoin has been moved the last time. Average cap simply just being a price average over time. And again, a random multiplication by 7 to get a line that historically was somewhat close to the price. So you might hear already from the tone of my voice that I'm also not really a fan of that delta top. But here comes the terminal price, and this is what I like way more. The terminal price did hit in all of the market cycle peaks. It currently indicates upside potential of 114K. And it takes again the coin days destroyed and divides it by the existing supply of Bitcoin in circulation. Multiplication by 21 makes somewhat of a sense because there can be maximum 21 million Bitcoin in circulation. So when we combine all of this, we get the following chart. Now, I don't really like the CVDD that much. I don't really like the top cap that much. And I think the terminal price used to do a better job at predicting the tops, even though predicting tops is harder than predicting bottoms. But let's just take those two models. This is where I currently see the potential risk to reward. No model is perfect, and of course the price also did break out of those bands slightly in the past, and there's no guarantee that those two models will work. But you have to define somewhat of a range in order to specify when you'd rather be accumulating versus selling. And currently, in my opinion, it's still time to dollar cost average in. You buy one Bitcoin today, you might be losing 14K, but you might also make more than 80K profit. Because in the case that we see another bull run, in the case that you can be contrarian enough to actually sell when everybody is euphoric and saying that Bitcoin will hit 1 million or so. This is kind of sentiment that we will be in once we hit the 100K. There's a similar kind of video discussing long-term trend lines, long-term regression lines for Bitcoin. That's the video that comes here. Looking forward to see you in that video, and thanks for watching this one. Bye-bye.